Welcome back to U.S. Farm Report. This weekend here to talk markets. We have Darren Fry as well as Arlen Suderman joining us. Darren, I'll start with you because USDA releasing that big crop production report after we didn't get one in October last Friday, so just over a week ago. But it was kind of bearish. I mean, USDA didn't really trim national yield estimates much in last Friday's report. So is the crop really that good, or do you think essential pieces of data were actually missing from the yield estimates due to the government shutdown?
You know, it's certainly possible they didn't have the data they normally have, but I was looking for a lower number. I thought they'd be closer to 182. When they came out with that number, I thought, wow, that's pretty bearish. I just wonder if we're going to see a big drop in January. I think everybody can remember last year we had about 90% of the crop harvested by the November crop report, and they had it pretty close, and then we had that big 4-bushel swing in January. So I think this could create more volatility in that January report if they do have big changes. The soybeans were kind of where I thought they'd be. If you compare what they said on this November report to what I've heard from farmers, corn yields are way worse than what they reported, according to my group of farmers. And the soybean yields could be accurate, maybe a little bit less, but soybean yields this year were close to records in some cases, records in others, but very good soybean yields. The corn yields, though, no matter how you cut it, it took a lot to get get corn yields above last year. So I think they got to come down on the corn number.
Arlen, what do you think? I know that you've put out some surveys. You had some high yield estimates to begin with. We know disease hit the middle of the country, but we are seeing some good pockets of corn yields across the country. So do you agree with USDA's latest yield estimates?
Well, the number matched almost exactly with what our survey told us, what our customers told us, and they have a pretty good track record. Now, I do expect it to come down in the January estimate because that's what big crops do. Big crops do get smaller historically, so I expect a smaller crop. And I was surprised at the 186 from our customer survey and surprised by the 186 from USDA, but I still expect January to be smaller. But here's the bottom line. The market's going to trade the bottom line, ending stocks. And USDA has feed usage artificially high. It has ethanol usage of corn artificially high right now. And so I think USDA is hoping that they're going to get a lower yield in January so that they can lower their feed usage number, but that would still keep ending stocks around 2.1 billion. So whatever the size of the crop, I think farmers need to recognize it's going to take an awfully lot to get ending stocks below 2.1 billion. And in the end, that's what's going to drive the price, along with what are the opportunities for us to sell some corn to China. Right now, we have no details on any sales to China or any sale allotments to China, but the market is trading a China premium right now. We do have great export sales to other customers, but part of that premium we're seeing in the price right now is hopes that China will also buy some corn.
Yeah, let's talk about that, Darren, because the markets did not seem to focus on the bearish aspects of that report along. We have seen some momentum in the markets. So what is fueling the markets this week?
I just think sentiment has changed somewhat. You know, the corn market, the wheat market, the soybean market been down for 2.5 years, even 3 in the wheat market. And I think we've just kind of overstayed our welcome, and now we're looking for a little bit more bullish fodder. And even though the numbers were large and it was bearish, the market acted great. And soybeans have led the way on hopes of Chinese business up to that 12 million metric ton mark. And so I guess as soybeans go higher, I don't know how corn and wheat break a lot. You know, it's always a row crop thing with acres. But I do think, you know, what Arlen said is true. We're overstating some of this demand. I'm way less on some of my demand numbers. But I'm also coming down with my carryout because I do think that we have a much smaller crop. Now, maybe we won't realize that in January. Maybe the cash market will sort that out. But I do think we're closer to that 1.8 area for a carryout than we are 2.1.
Arlen, there's a lot of skepticism that China will not meet that 12 million metric ton commitment for soybean buys. We've seen a slew of buys this week. The market, you mentioned it, the market seems to be building in that premium right now. So what if China does not meet that 12 million metric ton commitment for soybean buys? Do you think the market will be disappointed?
Yeah, I do think they'll be disappointed. If you look at the history of China, the phase 1 agreement, they purchased about or imported about 58% of what they committed to. And that's kind of the history of China. They make promises and then don't necessarily follow through. But I think the bigger risk here is I do think that there are some dynamics going on inside of China that means that President Xi is trying to smooth the international water so he can focus on rebuilding his support base at home. So I do think that he wants to at least give the impression that he is. But the key here is still going to be rare earth minerals and magnets. We're already seeing signs of him welching on that suspension of the export restrictions with new licensing procedures that are still going to prevent many manufacturers from getting the rare earth minerals and magnets they need or having to exchange proprietary information in order to get it. And President Trump may lose his patience on that because that is a national security issue. And so we could see the 100% tariff threat come back at any point, and that risk is there that we could see all this fall apart because of rare earth minerals at some point.
Interesting. Well, Darren, corn exports, that's a different story. Corn exports remain solid, so strong. Can that carry the market even if we have a 186 bushel per acre national yield?
I don't think it can. I think the yield has to come down. My export number isn't as big as what the government is. I'm a little bit less than them there as well. Maybe I'm wrong about that. Maybe because South America is going to use so much corn for industrial use with ethanol being, produced down there, and they're expanding those plants. And maybe we are going to export that much. But the export size is large, and we have had a robust pace. But I really think we need to see the yield get trimmed closer to 180, and we'll have to wait and see what happens. But I think the key will be not so much what China does with corn or wheat or even sorghum, but do they fulfill that obligation for the beans? Because the bean does have kind of a tight balance sheet. We could get a little bit tighter here too with the type of demand we're seeing. We know that crush has been good, and obviously we might have some delays here as President Trump announced for the import credits on feedstocks, but we'll see what happens. But man, demand has been good for not only the bean oil, but the corn for ethanol. And we could support because of those reasons with a declining yield.
Arlen, one thing we cannot ignore is funds. The funds seem to be buying. I know StoneX reported, I forget how many contracts of corn. It was several thousand, but 30 contracts of beans, 10,000 of soybean oil. Does the shift in dynamics there, does that really shift the dynamics in this market moving forward?
Yeah, the funds are a huge factor in this market and driving it, and at what level they're going to balance out supply and demand. That's a real concern here because they're following the headlines. And as long as the headlines are positive with China buying and they stay in this market, then they can keep prices elevated. But all it takes is one headline that makes it, and look at the cattle market for an example. Cattle market still has strong fundamentals, but yet because of the continued headlines about President Trump trying to bring down beef prices, the funds are liquidating their positions. Well, if we would see some headlines that would worry them about the opportunities with China, even if China were still buying, they might get scared and liquidate positions. So we have to pay attention to what the funds are doing.
Real quick, Arlen, could South America be one of those headlines, hearing some possible, some weather issues in some main areas? I know you have offices in South America. Is that a concern right now?
Yeah, as I've talked to our people over the last week in Brazil, they say, yeah, we have some weather issues, we normally do, but so far none of them are threatening to production. And I might add real quick, one analyst down there is even putting out an estimate of 190 million metric tons. I don't agree with that. I think that's too high. But those are the types of things we have to pay attention to right now with the weather being generally favorable.
All right, Darren, wrap us up. What's your advice for farmers? I mean, so many sold crops at harvest, Darren, for much lower prices that we're seeing today. They're trying to navigate this market, see if it will continue to push higher. What is your advice for farmers at this point?
Well, if you haven't sold, I'd wait for higher prices. I think we're going to have some retracements here to do reownership if a guy does reownership. I'm bullish the beans just from the standpoint the cycles and the fractal trends have aligned. That was the first tip off before we even knew what China was going to do. When we started coming out of that consolidation box above 1080, I think we can retrace down to that $10.90, $11 area to test the upper side of that. But I'm not bearish at all. I don't know whether we're going to have a big crop in South America or a little smaller crop. I don't know whether China is going to fulfill their obligations, but the soybeans look like they need to go ahead and move higher toward that $12.50 to $13 area over the next 6 to 8 months. And Seasonals are up in beans. So that keeps me from being too bearish corn, wheat, or anything. So I like reownership and I like waiting on sales because I think we have higher prices to come.
All right. Well, coming up next, we have Undersecretary Richard Fordyce joining us in the studio. There was another announcement, kind of phase 2, stage 2 of this disaster aid. What crops are covered, and is tariff aid possibly on the way? That is a question everyone wants to know. That conversation with Richard Fordyce next.